Talk to Jim Cramer right now about this employment number and what you think it means. Is this a Goldilocks number? Is this a great number, terrible number? If you're Jay Powell, what do you think? And if you're the market today, what do you think?
Look, I don't want to disagree with the narrative of 2 days ago, but I look at this number and think, why did he take 75 off the table? I mean, this is a number where it's made for 75. They got to keep rolling here. They got to get them up. And by the way, the Bank of England talking about how to stop inflation is with inflation. I mean, the regulator, the people who run the central banks, I think they are oblivious to how strong these economies are. And they've got to slow them down. They have to. And I think they have to slow them down now. But I just don't see it happening. Not with these. So, you got to take some big bites.
For everybody who's watching this morning, who's trying to figure out what they should be doing with their money in this market, given the fall off that we saw yesterday, are you? It sounds like you're very bearish. I mean, do you want to hold in this market?
No. There's a percentage of this market, a large percentage of this market, that are companies that are losing money that are growing. But they're not going to get to the promised land because they're losing so much money. And they have to be avoided at all costs. And then there are companies like Cigna that reported today a great number, lost in the miasma of what we're talking about. So, I mean, if you buy companies right now, if you buy shares of companies that make things and do stuff that return capital to shareholders and are profitable, you will make money. But the universe of those companies shrinks. I mean, look, the S&P's, is it up this week? The S&P's got a lot of companies that actually do that. The NASDAQ, no. Russell 1000, no. So, I mean, I think people have to come to terms with
what do you do? There are folks who are looking at the NASDAQ right now. They're saying, look, it looks beaten down on a relative basis. The question is relative to Alice in Wonderland might not be such a great relativity.
Well, are the companies doing well? Are they valued at a reasonable price? Are they returning capital, or are they doing some adjusted EBITDA that shows that they're only losing X when people thought they were losing 2X? Those are the companies that cannot be owned, even at this point.
So that's the case. So when you look at the NASDAQ today, you say this is not fair value. This has more to go.
Not yet. No. I mean, look, I had Shopify on last night. I mean, that's a great company. And its stock price is almost to where it was January 3rd, 2020. Almost. Not there yet. Got to go down more. In the meantime, they're spending a lot of money. They're not making a lot of money. That's not what I want. I've got plenty of companies that are doing well, that have good yields, that are becoming great yields because the market's going down, accidental high yielders, and you can buy those like you could buy them in 2008. Even in 2008, you could buy those companies. But you have to be very careful. You have to buy companies that may be here next year, not companies that beat the bogus expectations by 3 cents and only lost 32 cents instead of 38 cents. That's what you can't touch, Andrew. You cannot touch them.